By the end of this video, you're going to understand what top-down analysis means. You're going to understand why we use top-down analysis. You're going to understand everything you need to learn about the top-down analysis. All right, so let's go to the video, guys. Hey everyone, welcome back to the channel. In case you're new here, don't forget to hit the like button and subscribe. This is the King's Crown Academy, where traders are crowned. Right, in today's video we're going to be diving into the top-down analysis, right? And it's a powerful method on how to find high probability trade. Okay, so relax and enjoy the video. All right, today you're going to be learning top-down analysis in Forex, especially if you are a beginner trader. This is one of the most important aspects of Forex, right? All right, simply put, what is top-down analysis? Top-down analysis means analyzing your chart from the higher time frame, like the monthly, weekly, and then scaling down gradually all the way to the 15 minutes, the 5 minutes time frame. All right, it's how you view the market from a bird's eye view and narrow it down to the least time frame. All right, so that is top-down analysis. It helps you align the overall trend before zooming into lower trends, right? Okay, so that is what we mean by top-down analysis. Now let's look at this. Why do we use top-down analysis, and why do you think it's so important? Most beginner traders make mistakes of jumping straight into the lower time frame. All right, and this is why most times stop losses get hit. Okay, and this leads to conflicting signals and unnecessary losses. You see, if you understand seeing this market from a bigger picture, it's going to save you a lot of stress. By using the top-down analysis, you get a clear understanding of the trend. You get a better trade entries and exits. You also reduce risk and you have high accuracy. These are all the benefit that comes with using the top-down analysis. It's like a Google map. It's just like your Google map. You use it like a direction to lead you to where you want to go. Sometimes you zoom out so that you can view from a large distance where you want to go. All right, so on your chart, the top-down analysis serves same purpose just like the Google map. Okay, and I'm going to be showing you the practical example of this. Okay, now I want to break it down step by step on how you can use the top-down analysis. I'm going to do this thing on a chart, right? But first I'm going to give you so you can write something down for yourself. Okay, if you're a beginner trader out there, this is how you do the top-down analysis, step-by-step process. Okay, so let me break it down, starting with your monthly chart. First thing you need to do, you identify the trend. If it's an uptrend, if it's a downtrend, if it's consolidating, you're going to see it. You zoom out of your chart, start with the monthly time frame. All right, then identify the major areas of support and resistance level. These are the two things I want you to do on the monthly time frame. Okay, now move over to the weekly chart. Now it's getting more interesting. On the weekly chart, I need you to refine those key levels. Look for trend direction. You look for where the price is closer to the zones you had on your monthly time frame, like the support and resistance zone. You look for when you move to the weekly. Now you refine those lines, right? Those level. Now you look for trend direction and price action near that zone. Now once you do this, you can now add your trend lines. All right, you can add your trend lines, you can add your channels. You know, if it's visible, you can do that. All right, this will now give you will know the current zones that price is currently into. Right, then once you do that, it's time to move to your daily time frame. Right, you move to your daily time frame here. On your daily time frame, that's where you look for confirmation. Now you check for you confirm the trend continuation or if it's a reversal pattern. All right, that's where you confirm the levels, the key levels price is playing from. Right, you look for entry setups, you look for your double top, you look for pin bars, you look for breakouts. These are special candles that if it forms on a daily time frame near a zone, is very, very, very powerful. Very, very powerful. A daily pin bar candle near a weekly zone, it's a very, very, very nice trade setup. Okay, you can now use some technical indicators. Some people that use moving average, do you understand? You can use like a 50-day moving average, a 200-day moving average, a 100-day moving average to, like, help your bias. All right, on the step 4, this is where you go to a lower time frame. Right, you time your entry on a lower time frame using 1 hour or 30 minutes. All right, you refine your stop loss using this particular time frames, and you do this in the step 4. Okay, now let's go to the chart so I can show you how this is done properly. Okay, all right guys, back to the chart. Okay, now I'm using a GBP JPY. all right, or I'm using the trade view app. All right, now top down analysis from the monthly time frame, and I told you on the monthly time frame we're just here to mark out our zones. All right, now let's see. I have this zone here, right? I have this zone here. Right, I have this other zone here. Remember, this is monthly. Okay, and I have a zone somewhere here. Okay, now these are my zones. Right, now let's go to the weekly chart. Let's redefine these zones. Okay, and then draw our trend line. Take this up here. All right, trying to draw a nice trend line, guys. Okay, now I take my trend line from here. I want to see if price respect this. And then I have another trend line. Here, it's another trend line. Right. So yes, we have two trend line. One bounced off the other. Okay. Now, this is it. Let me take this out. Okay, and this is a weekly time frame. We started from the monthly. Remember, we just drew our major area of support and resistance. Now let's see what happened around this area of resistance. Okay, so this is a supply zone, which is also a resistance zone. Okay, this is supply zone, which is also currently our resistance zone. All right, this price reacted from here. Now, I told you that using this top-down analysis, you're gonna monitor you're going to monitor the charts. All right, you're going to learn where the touch points, the important points are. Right, then on the weekly time frame, I told you we're refining those key levels we drew on the monthly time frame. Right, we can now check the overall price action near the zones. Right, so let's do this now. Let me go to the chart. Let me show you. Now this was the price action near the zone that gave us the sell. Right, now what happened here was that price took out this candle. Price took out this candle high, right, and then give us a pin bar. This is the candle, right, and then you give us a pin bar near the support area, right, near this resistance area. Okay, now we trade in the opposite direction of the long wick. Okay, don't forget that we trade in the opposite direction of the long wick. You can see it here. All right, when you have this long wick, this is the long wick, we trade the opposite. Now based on CRT, and this is a weekly candle, price has taken out this week high, right, near this resistance zone. All right, so we could have easily caught this trade entering here, right, putting a stop loss above here. Okay, you would have gotten targeting the next zone. This is a 4-hour trade, right? You would have gotten a 4-hour easy, very easy, just using this, knowing this top-down analysis alone. Right, now let's go over to the daily. Right, we can now confirm our bias on the daily. You see how we use this top-down analysis to navigate the chart. Okay, so during the daily and 4-hour chart analysis, you're here to confirm the trend continuation or reversal, and you're looking for setups like a double top, pin bar, breakouts. All right, so let's go to the chart. Here on the zone, currently, let's do with the current price action. Price just took off, right? Price just have a nice reversal move here, right? So it came down, then it went up, respected this, and then it just had a break of structure, right? So we're waiting for a retest of this area, right, and then for a trend continuation. You see, so waiting for a reversal continuation, right? That's what we're hoping for reversal continuation on the daily. Now let's go to the 4-hour, and you see this is already happening. Okay, this is already happening. So we're waiting for price to come tap this area and see if it will serve as another support. All right, this area. Now haven't seen this, you can then go to your 1 hour, your 30 minutes, and plan your trades. All right, now based on this, I can put my stop loss somewhere around here. All right, this is the setup. This is where we're waiting for price. Okay, if price comes and reject around here, so we're targeting this next high, you can easily get to 1 to 4. All right, so this is it. So this is how you use the top-down analysis to get your trade. Okay, this is it. Very simple. So it's very simple. So if you're a beginner trader, understanding this top-down analysis is one of the biggest lessons you will ever learn in the forex space. Okay, now see, very easy, right? This is how we're waiting for this setup now and see if it's gonna play out. All right, because we've confirmed there is a continuation move to the upside. All right, so we want to see price push back up. Okay, now That is a bonus tip for you. All right, if you're just starting with the top-down analysis, here is a major tip for you. Stick with major currency pairs like the Euro USD, the GBP USD. They are the most predictable pairs. I keep saying this thing. You don't need to go and trade the fast-moving pairs as you're starting up. Okay? You just start with the major pairs like Euro USD, GBP USD, AUD USD. This will help you master your strategy. Okay?